Well, we got a fresh batch of data out on housing today. Home prices rose for the third straight month in April from March, but compared to a year ago, they posted their first year-over-year price decline in 11 years, while new home sales for May increased 12%. This all comes as higher mortgage rates have made home purchases more expensive for buyers, but potentially signal a sign of recovery in the market. For more on this, let's bring in Danielle Hale, Realtor.com chief economist. We just threw out a lot of numbers there, Danielle. Month on month, things look better. Does that point to a recovery?
I think it's too soon to say that we're in a housing recovery. We have been saying for quite some time that we think the sales low was in January. But I think today's price weakness is something that we're going to end up seeing for the next several months. In fact, just last week, we revised our housing forecast. We have been among the more bullish outlooks for this year for home prices, and we've taken our home price growth forecast and revised it. So we expect home prices to slip for the year, but less than 1%. So we don't think it's going to be a huge decline, but we do think some of the softness in home prices is going to stay with us. Buyers and sellers are trying to figure out what the right pricing level is in the wake of high mortgage rates, and that is a challenge compounded by the fact that we don't have a lot of home sales transactions right now. So it's going to be an interesting year in housing.
Danielle, when do you expect, you mentioned that further 1% decline in prices, when do you expect we'll see that bottom? Are we talking within the next couple of months ahead of the fall buying season?
So there are a couple of things going on in the housing market. So there's a strong seasonal pattern in the housing market. We tend to see the highest prices of the year in the summer and the lowest prices of the year in fall and winter. So that trend is happening. So even though, prices are declining year over year, they're moving up. I expect that we will see the usual cooling off that we see in the fall, but the year over year price trends may continue to decline. So I think we'll see that weakness sort of stretch through the next couple years. And then we'll start to see home prices rebound more convincingly in 2024.
What are you seeing among buyers right now that are in the market? And to what extent have you seen them continue to stay on the sidelines because of inventory, because of higher mortgage rates?
Well, it's interesting. It's more sellers that seem to be staying on the sidelines. Buyers, on the other hand, seem to be quite active. And if you look at the existing home sales data that came out last week, it was pretty steady. It actually moved up a little bit. And if you look at the new home sales data that was out today, it surged for the month. So that is lending credence to the idea that if you build it, if it's for sale, buyers are interested. And I will say there is one piece of information from new home sales data that suggests that it's not that buyers are interested in everything. They're interested in affordable homes. And so if you look at the price distribution of homes that were sold in the new home sales data, you see an increasing share of homes were sold under the $300,000 price point. So buyers are out there and most interested in homes at that affordable price point.
Yeah, so Danielle, what does that tell us then about first-time home buyers? It sounds like maybe they're accounting for the majority here of some of the activity that we're seeing.
Well, I don't know that they're accounting for the majority because it is still a challenging market from an affordability perspective. But I do think first timers are getting some opportunities because the market is less competitive than it has been. And because a lot of existing homeowners who might be repeat buyers are choosing to stay put and hold on to their low mortgage rate. So that's opened the door for first time home buyers. It's still not necessarily easy, but there are some advantages that they have now that they haven't had in a while.
In terms of regions that we're seeing strength, the Southeast continued to be the strongest region. The West, where I am, seeing the weakest activity, at least within the sector, the space. What's driving some of those gains, at least in the Southeast? Is it about sort of this migration that we keep hearing that has happened over time? And is it about the opportunities, the price points? What are you seeing there that leads to the strength?
Yeah, depending on the metric that you're looking at, whether it's sales or prices or market competitiveness, we generally see both the Southeast, the Northeast, and the Midwest performing well. Those are regions of the country where housing is much more affordable and where the labor market has shown some resilience. The one thing that is consistent across all the different measures, no matter how you're looking at it, the West seems to be lagging behind from a price and transaction perspective. New home sales data today, for example, most regions were up. The Northeast up by double compared to last year, but the West actually a little bit behind where new home sales were in that region last year. So The employment situation in the West has not been as strong. We've not seen as much recovery. And the tech sector, which is heavily concentrated in the West, has also been a bit of a drag on the regional economy. And we're seeing that reflected in home prices and sales trends.
Danielle, what are you seeing in the rental market? I know you have new data out showing that renters are seeing some relief. How much relief are we seeing, and how big of a dip is this indicative that maybe a trend is going to start?
Yeah, so it's the first decline in our rental data since we've been tracking it, which goes all the way back to trend data goes back to 2020. It was a continuation of a slowdown in rent price growth. So we saw that start roughly in January of 2022, and that number has just gradually eased to the point of declining now in this first month of data in May. I think we're going to see some continued weakness in the rent side of things, on top of the fact that we've got some imbalance already. There's a record number of multifamily units that are under construction and that are expected to hit the market later this year into early next year. That's a lot of supply coming online. Great news for renters who have contended with high rents. Even though they're coming down, they're still very close to highs. But that is going to mean a more interesting landscape for landlords as they're trying to figure out how to price to make sure that they can maximize occupancy in the years ahead.
Yeah, welcome relief either way, even if it's just a slight decline. Danielle Hale, Realtor.com chief economist. Good to talk to you today.
You too. Thanks.